Are we good now? Sorry about that. I had the wrong headphones. My apologies. We were talking about the day's session this morning. Let's go ahead and just switch it up to S&P futures real quick. I mean, wasted about 2 minutes. My apologies, guys. Thanks for that. Appreciate it. Good morning. Apologize if you hear some sound in the background. I got family over today. So again, bunch of 10-year-olds running around. So if you hear some background screaming and yelling and laughing, that's children. Back to what we were talking about when the audio was off. Let's keep an eye on the S&P this morning. I posted this on Instagram. This trend line was tapped here around 41.14. And again, that's resistance here. We've rejected it pretty much to the T. 1, 2, 3, 4. This is on the hourly. And you could see pretty much rejecting here due to PCE numbers. Now, PCE means personal consumption expenditures. So this is the number that the Fed looks at. CPI is important, but PCE is their number where they want to get at 2% inflation. That's compiled by the US government monthly as a way to measure and track changes of consumer goods over time. PCE are household expenditures. That's by definition. So just a reminder of that. Let's go ahead and let's see exactly that PCE number this morning. Consumer spending was better than expected, but PCE came in at 0.6 month over month. So that is still elevated and higher above expectations, higher than the previous month. How about year over year? 4.8% on PCE. Still elevated, still higher than the previous, still higher than expected. And this is what you're getting. You're getting the fear of, again, that we still have the inflation rearing its ugly head. We obviously had Powell speak to us to we still had Powell say that we're data dependent. Again, everyone was cheering. Again, I was long, no problem. I get it. But again, you don't just go get one green channel to the upside, one green channel to the upside. So again, S&P futures, keep an eye here. We may get a rejection. We may start falling a little bit. And there's a lot of dry powder here, a lot of space around 39.84, which is the bottom end of this range here. So again, keep an eye if where would be the level to go? Well, you can do 40.73 first. It'll be very difficult because you have tons of moving averages. But if you really kind of want to confirm about 40.60 or so, if you wanted to short, and then you could do 4,000, or you could do 4,000 here, or even out of the money here. Yesterday, we kind of had that fake out too, where we broke below that trend line, below this level, below 4,000, and then we did bounce. So again, I wouldn't want to do too many things on a Friday at 9:30 in the morning right away. I do have Apple calls that are running this morning. They are green. I also have Tesla calls that are running. They're both for next week. Other than that, that's basically it. I have some UOAs for Ford puts that is going to be for August. So we did play dollar yen. I talked about that this morning. Here we go. We'll go to the dollar instead. Let's do the dollar real quick because I was breaking down the day and I missed it, but I'll go over that here in a second. The dollar did bounce. Let's go ahead and look at the daily right quick. Again, the dollar is important. We know that. 106.11 was my level when we broke down, and that's why we traded dollar again short on the Forex channel. We did catch about 100 pips on it. We were as high as 140. We just moved the trailing stop. I mean, this was happening at midnight last night. So again, that's Forex for you. But again, we did break down, but we didn't break that 105 level that I was looking for. 104.85 is your 50. So again, I do expect lower dollar, but again, a little bit of a pop. Maybe we retest this 20-day would kind of show S&P futures to the downside. So remember, keep an eye on the dollar and S&P futures today, because you see the NASDAQ kind of pulling back a little bit. We had overbought conditions. It happens. So again, doesn't mean the market's over. No, but again, there's still, still volatility somewhat. I mean, it's very, very low now, the volatility index, now trading at 2206. But you could see here that we also have a gap to fill right around 2225. That could fill this morning. We'll get a little more weakness, maybe 40.74 on S&P. We'll see where we go from here. We just got to see where we get moving forward. We just got those PCE numbers. For those trading at home or who are investors, let's go and take a look at S&P in a big main area. Now, the level where I want to buy stocks, again, has been 3,500. Why is that? Well, here's the 3-week chart to kind of confirm that. It's a 200-day moving average. It's that 50% retrace line from the COVID lows here on a 3-year chart. So that was really my target on S&P. What might change on that is if the Fed pivots, meaning they slow rate hikes or start cutting or pause it in general. And then we could possibly retest the lows around 30. What was the lows that we had? The most recent lows. Let's see. The most recent lows we had was around 36.41. Could we retest that? Well, SPX is saying so we should because we do have a gap to fill, two of them here at 37.96 and one here at 36.83. They don't have to fill, mind you, but again, it's something to watch for. So I haven't really bought into this rally. The only thing I bought yesterday was government bonds, TLT. I expect bond yields to continue to fall. So that's why I am long government bonds. Our Chevron trade is up about 12%. Remember when we bought that, when we bought the dip? Chevron had a great quarter. That was expected. Nice gap up. We talked about that on the morning note. If you guys remember, we were right here around the 200-day moving average. That's when we started buying because crude oil hit what around 50, what was it, around 95? If you guys remember, now we're bouncing a little bit, but no real edge here to trade crude oil. The only good news on crude oil, if you're an oil bull, is that you're above the 20-day moving average. So again, if we can settle above that, settle above 99.02 or settle above 99, let's start positioning ourselves for some oil longs here. Maybe start looking at ExxonMobil, Chevron, or all the oil plays that have taken a little bit of a beating lately with crude oil coming down. The only reason I say that is the dollar, obviously we know it's getting weaker too, but even the dollar bouncing now and crude oil going higher, that's really good sign for the oil bulls. So again, we may get a little bit of a turnaround in terms of gas prices and oil prices to the upside, at least in the short term. Again, we're just traders. That's what we're looking at. S&P futures, look at that, kind of coming down now, even with that strong Amazon earnings report. I'll cancel this here. And you could see a nice pop and a little bit of a fade, about $5. Bring up Apple. We got as high as 164, fade about $3. So again, I'm still in the money on my Apple calls. I'll take them this morning. I'll leave a runner and go from there. In terms of the market, what I'm looking at, gold is up again, even with a firmer dollar or a decent dollar, up 0.30%. Let's take a look at gold futures together. And if we remember here, when we talked about this support level, you guys remember, right around 1681. Now, the only reason I didn't want to buy into that is because I really wanted to test the 200-day. Now, we may not get it, but again, we're just still at short-term resistance here. Support is now resistance when you do it this way, when you look at the markets. So again, we could retest 1700, maybe give us an opportunity to maybe go long on gold or maybe some gold miners, but you have to swing it because not a lot of volume there in terms of intraday or short-term options. Just the name of the game, guys. Let's see anything else that I'm looking at this morning. Let's take a look at yields real quick. Again, we know the drill. I still have an inverse head and shoulder on the daily, that pattern. We'll get to around 2.575. Technically speaking, if we were to bounce, we'll probably get to around 3% or so. So that's where we are this morning. CPE bringing down asset prices on futures from the peak. You can see that we're rejecting resistance here, or this trend line to the upside. Doesn't mean that we can't break it. I'm just saying that at least we'll get some weakness. Again, guys, 2 days of just straight buying, you're going to get some kind of a pullback. Would I run and go short today? No, just wait a little bit, see what happens. Maybe we get to 40.60. And if we do, then yeah, I mean, shorts would be a nice play, at least short term. And again, we're just going to probably be ping-ponging here within this range for a little bit until we start getting a clean break of around 41.25 or so. If we expand S&P futures as well, you could see that 100-day moving average, guys, that's 41.19. So that's your level. You're looking for 41.19. If 41.20, let's call it, breaks to the upside, that's your 100-day moving average. You could ignite higher to around 4,200. That'll be that space that you have there. But again, you need to break this trend line to get there. More than likely, we'll probably just kind of hover around. And again, guys, we've been kind of sticking with that trend line so far, pretty much since about 2 Wednesdays ago. Here, reverse, here, reverse, here, reverse, here, reverse, test support, breakdown, inverse head and shoulders somewhat. Nice pop, kind of come back to 4,000, that big gamma level. Nice pop, kind of sideways. And all this, what's this here? This is all Amazon and Apple earnings. Decent earnings, nothing bad there. But again, you could start seeing we're breaking down a little bit. You could do your first support around 40.73. We may not even get there. Let's see how the cash open goes. And Again, just put your alerts, wait, be patient, let the market come to you. If you had a great week, then there's, I have to do 40.74, below, not above. So my point is that if you had a great week, guys, no need to rush into anything. Take it easy. Take it easy moving forward. Um, let's see, I had one more thing. CVX. If you guys remember, we did buy CVX. I hope that wasn't cut off. It is up about 12% for Investment Club. If you guys remember, went to the daily. We tapped that 200-day. That's what we bought. Nice numbers from Chevron, trading at 155 now. Our average price was, what was our buy price? Okay, dollar yen just bounced. Again, good thing I got out of that. Let's see. Yeah, we had that 200 DMA on oil. We got in at 138.48. So not bad of a trade. Almost a $20 move from where we bought. So that's around about 12, 13% if we are looking at it that way. So I'm not going to sell it, obviously, but if you're someone who would want to take some profit, by all means, enjoy. Let's answer some questions. Good morning, Carlos. Does this all mean the S&P is also likely to go rather up than going down to 3,500? No. That's the short answer is no. And why do I say that? Because nothing has changed. We just got 75 basis point hike. All this move, guys, was oversold indicators, oversold sentiment, pretty much at the lowest form of sentiment you can get. I mean, just fear everywhere. And I think what happened here is when the Fed started talking about possibly going data dependent, he kind of hedged his bets both ways, and then said, "Hey, we could." That didn't say the word pivot, but again, possible easing of rates in the future. So that ignited the market. Again, this is all a bear market rally. Nothing has changed. Inflation is still elevated. Take a look at that PCE number. So again, we are still hiking. We are hoping for a pivot. I was hoping that we would get that, at least a confirmation, but nothing has been confirmed. So all we have done, guys, is really tested to the top range of this megaphone channel. That's it. And then we're going to come probably back down a little bit, break below 40.60. I definitely want to go ahead and start looking at short positions. And I want to target that, remember that magic level, 4,000, that the market has been kind of hovering around for support and resistance. So let's go ahead and keep an eye on it. Remember, we tested that 4,000 here back last Friday. We tested it again, rejected slightly, and then we ignited higher. So 4,000 is a good target. Break 40.60, I would say possibly a good shot. Take a look at the names that have overextended themselves recently. You have semiconductors that had gotten really, really hot. How about cloud computing? Really, really hot. The names that have just had earnings, Apple and everything else. So again, there is opportunities for traders. Volatility is a good thing. You want to take advantage. In terms of what your question is, Javier, 3,500, I'm nervous we may not get there. Again, the Fed might pivot beforehand now that we're in a recession. So again, if we expect demand to go down, inflation by definition will go down as well. So with that being said, we still have a day-to-day market in terms of trading. S&P futures is our target, 40.75. If we take a look at the dollar, again, the dollar being our guide, we know that. And you can see it starts testing the 100-day moving average, which it did yesterday, broke above it. Same old deal. This could reverse as well. So again, let's not make too many conclusions. But again, my contention is that it's still a bear market rally. Let's not get too excited. 2 days of green does not make a market. I hope that makes sense. Have a great rest of your afternoon, guys. I'm done for the weekend. I'm going to go ahead and enjoy a little time off. And we'll see you guys on Monday for the morning note at 9 a.m. Cheers, guys.